Hello everyone, welcome to part 2 of our cost accounting slash manufacturing video. So please make sure that you've watched part 1 before watching this video. We'll just be dealing with question 2, which talks mainly about comments, mentioning figures, trends, and all of those things. So this question talks about Styles Maker. The business manufactures designer shirts and their financial year ends 30 April each year, and it's owned by Les Styles. Now, we are required to provide evidence in the form of figures or calculations to support comments and explanations required below. So, one thing to note is that we need to quote figures, but to calculate, and to show calculations, number 3, mention trends. So this is what you're supposed to do every time you meet a question or a requirement that needs you to comment on something, right? So the first question requires us to do a calculations to confirm a calculation to confirm that the break-even point for 2023 is correct. Okay. So we're just gonna get straight into our information because we're not really told on what piece of information do we need to focus on. So there's general strategic decisions with effect from 1 May 2023. So these are the strategic decisions that this guy made in 2023. So he decided to improve the quality. I note there he improves the quality of the shirts to be more competitive. So he wants to be more competitive and to export to retailers in other countries. So now let me tell you why I'm highlighting these three things. So when you're improving the quality of something, you will incur higher costs because quality things, they are expensive most of the time, right? So he wants to be more competitive, more customers, more competition, more customers. Then exporting also to retail, more retailers in other countries. So now, if you're selling internationally, you will be required to pay customs duties, and at some point, maybe he's also responsible for the shipping costs. Right. So he changed to a new supplier of fabric. So he changed to a new supplier. Let me just use a new different highlighter. So he changed to a new supplier of fabric and employed some highly skilled. Okay, so that's highly skilled and creative workers to replace the workers who resigned or retired. Highly skilled, expensive also, or higher wages. Okay. Now, the factory overheads for 2023 included a training program for the factory workers amounting to 600K and the hiring of new equipment with the latest technology of 1.4 million per year. Latest technology, when you have that, most of the things are just done efficiently. So we also provided a training program. So training program, we are trying to enhance the skills of our workers there. Then hiring of new equipment. So this pieces of information might come in handy in the topic or in the question per se when we are answering most of the questions here. So production and cost, then we were required to talk about break-even point. So for this year, the break-even point is 4815, and we are just required to show if indeed it is 4815. So the break-even point formula should be fixed costs. Okay, so it's fixed costs. So that's total fixed costs over the selling price per unit minus the variable cost per unit. Okay, so if you're struggling with formulas, I have made a video that you can just watch and see how you can master all of the accounting formulas. Okay, so we have fixed costs. Okay, I forgot the figures there. So we have fixed costs totaling to 6,100,000. And then we have our selling price per unit of 1830. Then we have our variable cost per unit of 563 or 563. Okay, so it's 6,100,000 over that's 18, so it's 1830 minus 563. So then we just need to quickly calculate and check if that makes sense. 123, then it's 1830 minus 563, so that approximates to 4814.5 units, which is 4815 units, of course. So our break-even point is correct. Then we move on to the second bullet point, which says comment on the level of production and the break-even point for the past 2 years. Explain whether the owner would be happy about the trends in this result and the profit he is earning. Provide figures or calculations. So we're looking at the production levels, number one. Number two, we're also looking at the break-even point. So we need to compare these two things. But first, we need to have an understanding of what the break-even point is. The break-even point is the point where, or the number of units that you need to sell before you start making a profit. Before those units, you're just making a loss. If you sell the exact number of units of the break-even point, you're just making neither a loss nor a profit. You're just making zero. If you sell more than those, you're actually making a profit of the more units, of the extra units or the excess units that you're selling. So now, in 2023, you sold 10,500 units. In 2022, you sold 6,500 units. We want to find the number of units that are in excess that we sold in this current financial year and the previous financial year. So in 2022, remember we mentioned in quotes, we're quoting figures. Number two, we mentioned trends. Okay, number three, let's see what I say we need to do. Oh, we need to show calculations. Okay, so show calculations where possible. Right. So in 2022, production was 6,500 and 10,500 in 2023. So our calculation would be getting the difference between these two, and then it increased by 4,000 units between the 2 years. So now I've shown my calculation, I've quoted figures, I've shown the trend. So that's how you answer comment, right? So now we need to further our answer and talk about the comparison between the break-even point and our level of production. So now in 2022, once again, we sold, okay, let's not say we, so just say Les sold. So now this is what I was talking about. We said 6,500. The break-even point was in 2022 4267. Then that means we made 2233 units of profit. So 223 units above the break-even point, let's just say BEP, break-even point, to make a profit. And in 2023, Les sold, okay, that's 10.5k minus 4815 to get 5685. Sold 5685 units above the 2023 break-even point. So this guy, last year, he made a profit from 2,233 units. This year, he made 5,685 profit in terms of units. So now, we need to consider also the difference between these two amounts. How much profit did he make this year? 5685 minus 2233. So he made more profit generated from 3453 units in 2023. Cool. Now we move to 3.2.2. 3.2.2 says fixed costs. We are just required to explain why Les is not concerned about the fixed costs increasing to 6.1 million in 2023, quoting figures. Okay. In 2023, we can see that fixed costs have increased to 6,100,000, but in 2022 they were 4,100,000. So this may be due to our increase in the level of production. Some of our fixed costs may have been increased because of our fixed overheads also increasing due to the certain number of units that we have produced. So we could see that the difference only arises from these two numbers, because we had 3,600,000 in 2022 and 5,600,000 in 2023. So that's a difference of 2 million. But if you could switch your eyes and focus onto the fixed cost per unit, the total, this year it's 581, last year it's 631. Now you're asking yourself, why is it that we have an increase in the total fixed cost, but we have a decrease in the total fixed cost per unit, right? So what causes this is what we call the economies of scale. So if you're producing more units, the fixed costs are dispersed or they're spread among more number of units, such that the fixed cost per unit will now be much less when you produce more units, right? So just to make sense of this concept of economies of scale, assume that you have a tree that bears let's say 200 apples, and you want to transport these 200 apples at a cost of 500, right? Okay, the 500. So that the cost per apple would be 500 divided by 200 apples, which will give you a cost per apple of 2.50. Now let's say your tree just bears 500 apples, right? Now your cost per apple to transport would be 1 rand. See, now when we have more apples, our cost to transport the apple is 1 rand. So we assume the fixed cost there. So now, just because this guy produced more, that means his fixed cost per unit decreased from 631 to 581. So now we're just going to look at the difference there. So say in 2022, the fixed costs were it was 631 per unit, and 581 okay, 581 per unit in 2023. So Les is taking advantage of the economies of, okay, that's not really good, the economies of scale, right? So I think that would be a proper answer, but you can also go as far as calculating the percentages. I highly recommend that. It's also quite a good thing. You can also mention that because the level of production increased by by 4,000 units. Right. Now, moving on to 3.2.3, identify how the selling and distribution costs in total and per unit changed over the 2 years. Quote figures. Right. So looking at selling and distribution costs. So remember when we were reading information A, this guy now is selling to people in other countries and he wanted to expand his customer base, right? So of course we already have reasons to what might have happened, but let's just look at the numbers and see if our reasons align. Okay, so per unit last year we had selling and distribution costs of 46. This year we have 114. So it definitely makes sense that he had to pay more selling and distribution costs this year because of these two reasons. He wanted to sell to more customers. Of course, he had to pay customs duties and shipping costs, and also he wanted to expand his customer base or his market, his target market to say. Okay, so selling, I'm just saying S&D costs. So please don't write in shorthand. This is just to make sure I complete the video in the shortest of time possible so that you also don't get bored. So it's selling and distribution costs. So at S&D costs increased from, let's just make sure that the numbers are correct, from 46 to 114, from 46 rand to 144 rands in 2023. So there it's in 2022. Okay, in 2022. So increased by, so let's just quickly get the difference. It increased by 68 rands. Okay, now we have quoted figures, and then what else can we say about that? We can look at the total, of course, because they said per unit and total. So in total they increased from 300,000 to 1.2 million. That's a big jump. So this is per unit. Okay, in total selling and distribution costs increased by 900,000 from 300,000 in 2022 to 9 out, so that's 1.2 million by 1.2 to 1,200,000 in 2023. Right, so the two reasons would be that he wanted to expand the market, the target market, and or we could just say his target base or his customer base. Right, so we could also say or more competition. So just make sure that your answer is structured properly and it makes sense to your marker. I'm just giving you a few ideas. It's actually not a few ideas, but it's what we were given in the scenario, so it's what you should use. Don't think too outside of the box on answers, on questions that you were given answers for, because if you are just saying things that are outside scope, then the marker might just mark you incorrect. Okay, so now we would talk about the shipping costs and customs duties to be paid as he now sells to international retailers. Right, Then now we're just going to quickly move to question 3.2.4, which says Les made specific decisions to improve the business and its product. Explain how the decisions he took have benefited the business by providing two separate points relating to raw materials, and you are required to quote figures and or calculations. Right, so we're just gonna go straight to raw materials to see what we have. Okay, so that's in information C. The cost of fabric per meter increased to 2,000 from 110 rand. I think we all know why that happened. It's because of our reason here in A. We have more expensive. We also have an improved quality, right? So we are just going to mention that there. So in point one, let's just say increase in cost of fabric per meter from 110 to 200. So increase of 90 rands, right? So this is due to the purchasing of, okay, so purchasing of a better quality fabric, right? Then now what else can we look at for fabric? We are noticing that 1.8 meters are used this year, but last year they used 2.5 meters of fabric. So that means less wastage this year because they're using less material per sheet. So now we could just say in 2023, in 2022, 2.5 meters of fabric was used, which decreased to 1.8 meters in 2023. So this might have been also because of the quality fabric, because if they're able to handle the good quality material, so this is something that's good because now there's less wastage and they can just produce more. They can use the fabric to produce more units. So we could just say quality fabric is easier to handle and used to produce more units, right? So you could also mention anything about the production, that now since we have increased our production by 4,000 units, then that could probably be because of the good quality material. And we could also mention something about, okay, because I haven't analyzed this one, so we have used 43200 meters this year, and then last year we used 44,000 meters. So last year there was more spoilage because we produced less number of units, if you could see, but we used more fabric. This year we produced 10,500 shirts, but we used less fabric. So the good quality fabric really came in handy. It really worked for the business. Then now we're just gonna quickly get into direct workers. So with direct workers here, last year we had 15 workers. Now this year we had 12 workers. Okay, and if you could look at the average wages per worker, there's an increase here between these two numbers. Okay, 78 from 64. But what we need to do is get the percentage increase in the average worker and the average wages per worker. Let's just see how much the increase is. Okay, so I'll just make a quick calculation here. Increase from 64 then to 78, right, which is okay 64, which is 21.87%, right? But if we could compare this to your increase in the level of production, okay, so this is average wage per worker. Okay, that's going to be a bit confusing, but yes, it's average wage per worker. So this is just me showing the calculations, but you don't need to really give abbreviations like this. This is just for illustration purposes. Then now, if I'm looking at my levels of production, okay, I remember very well, it was from 6,000. Okay, let's say 10,500 minus 6,500 over 6,500. I want to see the change in level of production, right? So 6,500. So that gives me 61.53%. Right, so this is quite something to look at because we have increased their wages by 21% and they have increased our levels of production by 61.53%. So this is a good thing. Now it shows that this guy has made a better investment because he hired highly skilled workers and he paid them more, of course, but only by 21%. And then the levels of production increased by 61.53%, which is quite good for the business. We could also mention that they produced also 4,000 more units, and then we could also look at some figures here. So here we're talking about increase in average. Okay, I'll just say average. Please pardon my abbreviation. Average worker. Okay, average wage per worker by 21.87%, but the production levels were up by 61.53%. Okay, then lastly, which is one simple one that you can look at, is our direct labor cost. Direct labor cost was 936 this year and 960 last year. So per unit it also decreased from 148 to 89 bucks. So what we can just state, we could talk about either the total or the per unit. Yes, so total direct labor cost decreased. So DLC is direct labor cost, but please, I do not recommend shorthand. Do not write in shorthand for exam and test purposes. This is just to illustrate. So total direct labor cost decreased from 960,000 to 936,000 between the 2 years. So now a decrease of, that's 24,000. You could also mention per unit. In 2022, direct labor cost was, let's see, so in 2022 it was 148 and one, okay, then 89. Okay, so it was 148 and decreased to 1. Okay, was that 89 in 2023? Okay, so this brings us to the end of our part 2 of cost accounting. So I really hope that was beneficial, and I hope most of the things made sense. So if nothing or some of the things made sense to you, please don't be shy to drop a comment. Other than that, don't be shy also to subscribe, like, drop a comment also on any other paper 2 or even paper 1 questions that you might have, and recommend any other past question papers that you might want me to look over. I'll definitely see you in the next video. This is Acing Accounting. Cheers.